Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by United Wholesale Mortgage.
Does your wholesale lender do this for you? Free customizable marketing materials, online loan tracking for your clients, returns your past clients to you, and complimentary client retention campaigns. Don't you think it's about time you found one that does? Partner with United Wholesale Mortgage and receive these benefits and more.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network. It was another exciting week as yields dropped down to their best levels, lowest yield, best prices on mortgage bonds that we had seen in 2 months. Now, do we continue as we roll into August here and see if rates drop a little bit lower? We'll talk a little bit more about that, but a lot's going to depend on the results we get this week because it's jobs week. And jobs week always a very influential time for interest rates. Now, last week we had seen yields close Friday very low thanks to something called the Employment Cost Index. Alan Greenspan used to love this report. It comes out every quarter. And it was the lowest report that we had seen as far as wages rising in a very long time. Now look, low wages or wages not rising, that's not a very good thing. However, with regards to inflation, and that's what bonds care about, this shows that there is a lack of wage pressure and inflation. And it reverses the number we had gotten after the first quarter, which had shown wages rising at a pretty rapid pace. One of the reasons why you saw interest rates rise into the second quarter, because once this report came out about 3 months ago, it showed wages were on the rise. The Fed didn't look like they were going to do anything about it. So the bond market, in order to protect itself, started to increase the yield that was received in order to counterbalance the higher level of inflation. Well, now we've seen a reversal of that. So it's possible that we could see a trend to the downside in yield, reversing what happened after the first quarter number. But there's more to the puzzle. And as I mentioned, this week we're going to get a couple of reports on employment that are very important. ADP on Wednesday, and on Friday, the big BLS jobs number. And these are going to weigh heavily into the Fed's decision for September, whether or not they hike rates. Now, last week, the Fed stayed pat. We knew that they were going to do that, but they did give a little bit of a clue that said they were leaning more towards a rate hike in September. And that clue came by saying that they acknowledged that the labor market had improved. Now, knowing that that's an important factor in the Fed's mind, this Friday's number and also Wednesday's ADP number will be accounted for with a lot of weight when it comes out. Again, 220 to 230 jobs expected on both of these reports, but the two things that are going to be focused on is the unemployment rate, which is now 5.3%, and perhaps even of greater emphasis would be average hourly earnings. Let's see if this employment cost index report, which came in very low, is kind of washed by higher hourly earnings. If that happens, we could get whipsawed in the bond market and we could see prices lose all of their gains from last week and in fact start that upward trend in yield, downward trend in price. So worse rates, worse pricing if that happens. But if it confirms the employment cost index and we see wages are down or surprisingly disappointing as far as growth in wages, well, then you could see a nice continuation in lower rates, lower yields, higher prices in bonds. Just to give you a proxy here, let's take a look quickly at the 10-year Treasury. And the 10-year Treasury, as you can see, it closed at its best level since the early part of June, which 2 months ago started that big move higher in yield and has since had some seesaws, but has come down now and at some pretty good levels. There are some floors underneath us that will be difficult to break through, so we have to be a bit cautious here. The yield now is at 2.19 on the 10-year, but at 2.17 there's a pretty serious floor, tough barrier to break, and then again at 2.14. So some tough floors here to get through. Again, the jobs report will be the catalyst. Low hourly earnings, maybe a disappointing job report, and you will see yields plunge through these levels and hit some of the best levels now that we've seen in potentially many months. Getting back around 2% on the 10-year is not out of the question. But we see a number come out on Friday for hourly earnings that shows that that ECI report that yields really dropped on Friday, last Friday, kind of gets washed away. And you could see a move back up towards where we were, maybe even worse. So a very pivotal week ahead. And it's something that we really need to be on guard for. And hey, this is a great time with all this activity happening and the potential to see another either refi boom or protecting ourselves from what's transpiring. This is a great time to take us up on that free offer and the Mortgage News Network free offer for a 2-week trial on MBS Highway. Just simply click on the link and be prepared, be informed, use the site. There's so many tools. We show you these from time to time on how you can articulate to your borrowers and real estate agents the benefits of home ownership, real estate data from every part of the country, tools on how to use adjustable rate mortgages instead of fixed. I was on Fox last week, and that segment was very well reviewed and well received in showing people the surprise of how beneficial longer term adjustables can be. You can check it out on our site as well and use that, take the link and copy it and use it to reinforce your point on how you can help your customers utilize an adjustable rate mortgage over a fixed rate and beat your competition, help your customers, show them what's going on. All right, I hope you have a great week ahead. Talk to you again next week. Bye-bye.
Today's Master the Markets was brought to you by United Wholesale Mortgage.
This is Mortgage News Network.